Welcome back, ladies and gentlemen. Hopefully you had a good pit stop and refueled and recharged for the next session of Sustainability Week Asia. For those of you who weren't in the room earlier on, my name is Andy Staples. I'm the Editorial Director for Initiatives and Alliances at Economist Impact, and I also head up the Policy Research and Insights team for Asia Pacific. It's my pleasure to introduce this next session, which is titled Fostering a Carbon Market in Asia, which is supported by Signify and Singapore Management University. I'm doubly delighted to welcome my guests to the stage, and I'm just going to invite them up now. Adeline Anthony, Head of Sustainability for Axiata; Jitendra Khurana, Country Head and Managing Director, Singapore, Apex Systems and Service Leader, Signify; Nikki Kemp, Executive Director, Singapore Green Finance Centre, Singapore Management University; and Victor Chen, who is the Chief Executive of Delta Electronics here in Thailand. Thank you all for joining me. Thank you very much. Please do take a seat. I'm just going to give a couple of sort of words to set the scene. With a shrinking window to limit global warming by 2050 to well below 2 degrees Celsius above industrial levels, businesses are beginning to step up and set bold environmental, social, and governance and net zero commitments. While setting decarbonisation goals is somewhat straightforward, the means to achieve them can be less clear. With its vast economy, Asia is now at the centre of concern about emissions. In the past 2 decades, the world has seen a 46% rise in carbon emissions, largely driven by the growth of industry in Asia. Decarbonising business models means embedding climate considerations in governance, operations and finance, and shifting to circular practices. Underpinning all of this is the need for a carbon market, and we want to pose the question, is a carbon tax feasible in Asia? So just as we get underway, we'd like to get the polling up. I think we're going to do a quick poll, and the question is, do you think that a carbon tax is feasible in Asia? So if you scan that QR code, you'll just be asked for a yes, no, or undecided. The question is, do you think that a carbon tax is feasible in Asia? Okay, whilst we're waiting for the responses to come in from the audience, I'm going to kick off here. And Nikki, I'm going to come to you first for this one. Is it feasible? Where are we in terms of developing that type of market in Asia?
Yeah, I thank you very much for having me, Andrew, and to the Economist Impact. It's really fantastic to see how many people are really, wanting to hear about how do we progress some of these really intractable conversations. The carbon market has, as many of you who've been following it or involved in it, has really underperformed what we anticipated over the last decade or two. And it's a shame because it's a financing tool that is based on performance, or you have to act in order to create the credit and to trade it. So it's a fantastic instrument because it's all about acting on carbon and acting on the decarbonisation agenda. So really, the question now that I think we face is, how do we move from what has been sort of a fragmented, particularly in this region, a very fragmented and perhaps late to the market from a compliance perspective, from a taxation, from a how do you create a regulatory framework and so on, and the voluntary market just hasn't had the confidence in order to build to any substance. So, and here I'm just talking about this region, and there's been a lot of attempts. What we've done at Singapore Management University through the Singapore Green Finance Centre, which we operate in conjunction with Imperial College in London, so really great because we get a lot of the inputs from Europe, who are a bit further ahead, in the UK and Europe. And what we're doing is looking at what are some of these sort of broader framing that needs to be done in order to support the market. And market infrastructure is 100% incredibly needed in order to create a more confidence, integrity, transparency, pricing, discovery, and so on in generating a much more active and really increasing the volume of this really important financing mechanism.
So if I could just pose a sort of basic question before we start to hear from industry. If you're thinking about the development of that market infrastructure, where are we on that curve? And right up here being, we've got a fantastic market that's working very well, and we haven't started. Where would you say we are with the region?
We've more than started.
Yeah.
I mean, we've more than started. In fact, last year was an incredible year for market infrastructure through some of the exchanges that have been set up, and Thailand's no different. There was last year the exchange, emissions trading exchange was established here. A number of other countries in the region, Malaysia, also, and Singapore, of course. The other countries that have been talking about it, I think, are getting there. So the Philippines, in Indonesia, and so on. It is the right time to be doing this, and it's the right time for individual countries to be moving ahead. So I'd say we're kind of off the starting block,
Yep.
and we've got probably quite a long way to go in order to establish what does that look like from a country by country perspective, and then how do we make sure that regionally it is efficient, so we can really have similar frameworks or understandings of standards that can be translated across different markets and through the different exchanges.
Thank you. So we're up and running, but we really need to accelerate, which is one of the sort of themes of this conference. I'd like to come and hear from our representatives from industry here, and thank you so much for joining us. Adeline, you're head of sustainability at Axiata. I wonder if I could ask you about, from your perspective at Axiata, how you got started with carbon credits. Where are you on that journey?
All right. So it's not something that we have started on. We are kind of like, potentially we need to look into it. We've signed, we're on our net zero journey. We are in the process of getting our SBTi targets validated. And we know that, ultimately we will need to use some level of carbon credits to offset. So I think interestingly is that as an organization, when you want to move into something new, there is always that thing about fear. Fear of greenwashing. You do hear a lot about it. So carbon credits is also something that you purchase. Sometimes you don't know where it's coming from. So I think the key here is really turning fear into capability building. We need to build our own capability. We need to have evaluation criteria. How do we move into this? In countries like Malaysia, for example, we have the voluntary carbon market. That's one. But there's also a lot of strict governance around the board, for example. So the board is responsible, essentially, for organizations. Let's say we've committed to net zero. How is the board accountable to drive this? So, of course, everyone is a bit nervous in terms of, am I doing the right thing? The board is also nervous. So how do we also upskill them? And carbon credits would be part of your net zero journey, which means that it needs to fall within the strategy. And for us in Axiata, we've had established our scope 1 and 2 emissions maybe 2 years ago. We have been working, internally on energy efficiency, moving into renewables wherever best we can. But we just established our scope 3 emissions. So that also means that, you need to understand your scope 1, scope 2, scope 3, and how would carbon credits now fit into that strategy. Fitting into the strategy is one, tying it back to your organization's agenda is another. So Axiata, we're actually a telco company, and it's a lot about being inclusive. It's a lot about connecting people. So what kind of credits will we be looking at? Will we be looking at credits which are nature-based? Will it be socially based? So I think these are the considerations that we have to take into play when putting this as part of our strategy. So it's really interesting. We do get a lot of people approaching us now, to talk about what's out there, what are the mechanisms out there, what are the credits that's out there. But it would be really great to also have that conversation around how would this fit into the bigger strategy of an organization. Yeah.
Thank you very much. So, some encouraging signs here. And your point about board education and getting that buy-in, I think, is very well understood. Mm-hmm. Victor, if I could come to you, I think you started your journey around sort of internal pricing some years ago. So could you give us an understanding of why and where the drivers of that and where you are today?
Yeah. Delta is a manufacturer of merchant power supply. So for years, the driving for better efficiency in our product is a natural business target. But over the years, we have joined a number of initiatives like SBTIs to try to account for how much electricity actually is consumed during this process. So internally, we first across the board try to estimate and then calculate mostly electricity consumptions. And in the 2015 timeframe, we discovered through internal programs we were able to improve our energy intensity in a period of roughly 3 years up to 2018, about 50%. There's a lot of low-hanging fruit that we can improve on to reduce our energy consumption, like recycling the burning energies and so on and so forth. And then we joined this international initiatives to try, like COP events. But internally, from 2019, we announced these ICP pricing, $300 per metric tons of emission. It's from all understanding, it's a pretty steep pricing, but we just kind of set a number and go at it, and use the number that we collect from internal organizations. Up to this point, I was told about $130 million. Use these money to improve furthermore through like 2,500 different programs to improve furthermore on energy efficiency, waste, and also purchase green renewable energies to help us to reach RE100. We declare a goal to be RE100 compliant by 2030. So all these quote-unquote taxes actually helps you to find the resources to drive a lot of programs. So you asked the question whether whether carbon tax is feasible. I would think it's definitely feasible once folks feel this this pressure. Definitely, they will mobilize to do something, and we were able to save, as I mentioned, 50% energy intensity improvement after a few years, save a further 20–30% of consumption, not year after year, but in a period of regularly 3 years. Yeah. So that's, I think, example of what industry itself can do. And actually, not waste your money. You don't want to wait till people taxes you on these emission costs.
This is the point, isn't it? It's a very strong business rationale.
Right.
Accelerating these measures. Okay, Jitendra, let me come to you then, and on that same sort of question about your journey, and perhaps let the audience know what Signify is and who you work with.
Yeah, so Signify is the new name for Philips Lighting. So we are the global leader in the lighting business, operating out of 70 countries, and certainly very, very focused with the sustainability pretty much at the core of our strategy. If I may just take this into two parts. First, to perhaps also put my thoughts onto this carbon tax. I think Singapore especially have taken certainly lead and also essentially moving the tariffs, by multifold recently, of course. And I think when we speak to the customers and industry, there are, of course, mixed reactions to that situation, as you could expect. On one side, of course, there is one school of thought which suggests that, yes, all these carbon tax essentially would impact the competitiveness of the industry in general. But then, when we look at some of the facts, to the contrary, the manufacturing investments have only been shooting up since the carbon tax got announced. We have seen some of the, I would say, rather big contributors of carbon emissions, like the oil majors, wholeheartedly putting out their support to the initiatives from the government. But also, I think very interesting to see is that when Singapore took a position, essentially to, get very serious and with very clear, interventions on cutting down the emissions, we saw a lot of inflow of the green technologies and investments along with it. So EDB investments are renewable, just committed, 10 billion investments in Singapore. So I think there is, of course, an emotional reactions to these carbon tax, which often tends to suggest that there is perhaps on a short-term basis a negative impact. But I think a lot of data and facts, and of course some of the market forces tend to suggest otherwise. So I think, holistically speaking, I think it certainly is an interesting thing to see. Another element which I personally feel is very important is also that, governments around the world, essentially are trying to see how you really play carrot and stick. So of course, carbon tax in some senses you could see more like a stick approach, but then in Singapore and a few other markets, we also see a lot of incentives being rolled out, right? So companies who want to really, embrace new technologies, they would certainly get some subsidies and support, essentially to really, quickly adopt and embrace new technologies, essentially to cut down on their scope 1 and scope 2. So those things also, of course, comes hand in hand. I've often seen that governments don't simply resort to just taking tax as one of the measures, but what comes alongside are the other softer elements, which certainly offers a more holistic approach towards the interventions designed by the governments. Yeah.
Okay. I'm just going to refer back to the polling we did there. 68% of you said that you think a carbon tax is feasible in Asia, which is great. 27% say no, though. Nikki, on your comment on that, and sort of more broadly, what's required to foster this sort of regional carbon market that's effective and credible, and that can work with corporates to give it some real legs?
Yeah, thanks. Look, I think working with corporates is really fascinating. Working with governments is really important, critical, and working with the infrastructure players. So it's the ecosystem approach, right? What we've done very recently in response to where the market is moving and what the need is in this region is to establish not only research around this, but also to get the feedback from the market through discussions and roundtables and so on. The first of those was done in London, and that was done late last year in order to really understand sort of more of a global perspective. There will be a follow-up in Singapore sometime later this year, date yet to be determined. And we really encourage participation in that because the conversation is really flawed if we don't have the ecosystem involved. But the findings were really interesting. There were 6 major findings that came out of the baseline research and the roundtable, and that was that the role of and this, it sounds really fundamental, but it's so true. We know that a market-based mechanism needs a place to trade, and it needs a place that people trust. And so having those exchanges. The innovative platforms that are also being developed to support those platforms, things like Carbon Place and so on, are really fundamental to making the market work. And so that was the first. It creates also an opportunity for the intersection between the voluntary market and the compliance market. So if there's a tax or a floor on the price, then there's a place for those markets to have a common trading opportunity or a place in which to trade. The price discovery is really critical, and I think that sort of goes to the whole point around carbon tax. Because it is a mechanism, it's not the only mechanism, but it is a mechanism to create a floor for the price. I'm not sure 300's a floor, but it's a fantastic, I really admire what you've done there, because a price of 300 would absolutely radically change the whole economy around decarbonisation. But unfortunately, we're not quite there yet. Delta's leading the way. But creating a floor in which to establish sort of reliable returns, if you like, so for investors to be able to come at it with that sense of reliability. The other is there's collaborative initiatives, and these initiatives, we were talking just before we came on stage about the importance of collaborating, and this is collaborating across the ecosystem players more generally, but also across industries and across academics and so on. The one that I wanted to point out is a really important one because it's aiming to clean up the market of all of the various different registries for carbon, and that unfortunately is creating that confusion of like, where do I go? Where do I find the right carbon for my story, for my company's story, for my journey? And so the Climate Action Data Trust, which is an initiative by the World Bank, IETA, and the Singapore government, interestingly, is aiming to do that. So these are some of these sort of collaborative initiatives, and the findings were that, yes, we need more of that. Yes, we need to sort of reduce the fragmentation. The others are really obvious. Innovation, we all know that. Regulatory frameworks, so really having some standards that cut through. I think ASEAN could really play a role here in establishing some regional standards that we can all rely on. And the final one is the public-private partnership concept is really, really critical because we do need the market to act, but we need the market to act within, I guess, a reasonable standard of behaviour, if you like. So working towards the social aspects and the environmental aspects in addition to the broad base of making money out of this.
So thank you for that. And let me just pick up on one of the points you raised there about the sort of, if you're looking outside from the organisation, it's confused, it's fragmented. Victor, it's easier to control what's going on within your organisation. You were sharing your journey there about internal pricing and so on. But as you look externally, how do you move from the internal to the external? How do you start engaging with that external market infrastructure?
Yeah, it is not an easy answer because in Asia especially, only a couple of countries have laws on this carbon emission and taxation. Most of the countries are now doing it on a voluntary base or still on a trial base. So there's not a lot of rules to go by. As we interact with government, from time to time, policy will kind of shift and change. It still, I think, would take a little bit of time to get it finalized. But within industry business, we have seen the forces of very large customers asking your product to be manufactured entirely with renewable energy. Yeah. And so businesses sometimes left at their own to find the solution. And I think we were fortunate to start some of the effort earlier without knowing these. But now that we have started, we are more readily equipped because with the money I mentioned, we built some of our own rooftop solar farms to generate power, and we were able to engage with some of the suppliers in an earlier time frame to understand the ecosystem and so on and so forth. But anyhow, I think over time, collectively, these must become law and rules that people can act on, whether there is a market or whether there is a consortium. I think the mega trend is going in that direction is inevitable. We might as well start early on your own to try something instead of waiting for the set of standards to come up.
And so, Adeline, Jitendra, same sort of question there, because I know you've got different experience. You operate in lots of different markets as well. It's challenging. There's risk, complexity, cost to all that. How do you navigate it?
Yeah, so I think what Victor shared is really interesting. I think the internal carbon pricing is something which is, I think the thing about climate change now is everyone knows it's there. How do you hasten it? And I think, just internal carbon pricing is something great that if you could continue advocating to a lot of organizations, going out, sharing, how you have made business sense out of it. I think that's key. And I think once you put something tangible in terms of what you're doing, then you can move beyond just your organization. I think when you talk about credits, how do we do co-financing, co-development, I think that's that area. So I think that was something interesting that Victor spoke about. But from my perspective, I think, so I think just a bit of background on Axiata. We're actually a telco company. We are based in countries like Sri Lanka, Bangladesh, Indonesia, also in Malaysia. CelcomDigi is part of us as well. So we are in a market where it's challenging. And one of the things that you need to move towards your net zero is renewables. And this is something which is still relatively difficult to access in a lot of the countries that we work in. So I think we've gone down that route of advocacy as well. How do we get together, within our industry, together with the government? We've run a few roundtables in Malaysia, in Bangladesh, to really see how we can gain, as a telco company, how do we get more access to renewables? Because unlike factories, we don't have rooftops that, you can just install solar panels. Our assets are mostly the towers. So it's really getting around that as well. And I think it's a lot about advocacy. It's a lot about sharing your challenges, trying to understand what policies are out there. And essentially, I think that's that big area of collaboration in order to drive this in the regions where where we are present.
Thank you. And
Yeah.
Jitendra, same question to you. And
Yep.
is it a similar experience? How are you approaching that sort of external market?
Yeah, so again, as a company, I think I'll not zoom in much. We have been very, very active in, and we have achieved big milestones in reducing our scope 1 and scope 2. But I think zooming in on the point what you're saying, which is essentially what are we doing, to actually bring in some of the latest innovations toward the customers, which essentially means scope 3 for us, but actually scope 1 for our customers. I think it basically starts from a very fundamental levels, essentially that do you have not just the compelling innovation, but very credible innovations, right? Because when you bring in new technology solutions, customers likes to see technologies which have been proven and don't want to be, of course, in some sense be experimented upon, right? So that's an important element. So you need to bring in the innovations which are credible, right? Not just, of course, compelling. The second part often is, of course, don't want to emphasize the awareness, even though it is, of course, growing massively, in the value chain. But when it comes to really actionable insights, those are still missing on the customer side, right? And that's why the responsible corporates and people who are really, focused in innovating in the sustainability space needs to bring, specific use cases, easy to understand and comprehend, and something which is actionable for the customers in general. The third one, and that's generally the most important, once you have overcome that initial knowledge gaps and the barriers, I think important part becomes the investment and the finances involved. Because, yeah, everybody loves to go for the latest innovations, but it actually generally very expensive. So I think then the corporates and companies who are, of course, bringing these kind of compelling products and solutions to the market also essentially needs to think that is this really making a positive business case for your customers, right? You can, of course, bring a technology, but if the technology takes many years to pay back, then, of course, you will not see the kind of adoption which you possibly would like to see, right? So I think the positive business case, in some sense, is very, very important element, and the companies needs to focus on that if indeed we have to move the needle quickly. And I'm happy to share that in Signify, especially, that also means that we had to revisit our business models itself. So from our typical, because we work in the built environment for most of our business, it's a very traditional, value chain in some sense. Yeah, you have the tenders, you bid for it, somebody pays upfront, and then, of course, the product and solutions get installed and then gets maintained over the life cycle of the solution. But if you really want the needle to move and people to pick the most energy efficient, the most innovative solutions, yeah, you need to, of course, reverse the whole, decision making in the value chain. So we now work much more with the end users. We don't ask for the upfront investments in some cases and offer our most compelling propositions as service models. So which means, yeah, so you have to pay nothing upfront and you get, the whole upgraded technology solutions with service model in place. Furthermore, it's all packed up with the performance-based contract. So we commit on the KPIs, making sure that the customers fully have the confidence and, of course, an underpinning that this solution will work and perform the way they, of course, expect.
It's a really important point, isn't it? Putting carbon,
Absolutely.
climate change at the heart of the business model can mean a complete innovation of the business model.
Absolutely.
And something for another panel a little bit later on. We're going to run out of time. I do have time for, I think, one question from the audience. If you'd like to put your hand up, let us know who you are, and a microphone will come to you. Please keep it very short and sweet. We've just got 2 minutes.
Okay, thank you for the panelists, and it's very exciting to hear companies pledge net zero. My questions to both Adeline and also Jitendra is, what is your strategies to decarbonize or reduce your scope 3 carbon emission?
Thank you very much. Okay, so quick responses from both of you.
All right, I'm going to go first. So I think, as I mentioned, we just established our scope 3 emissions this year. We do have a preliminary decarbonization plan. I think that's one of the requirements that we needed to submit to the SBTi as well. So I'm just going to keep it a bit high level because, as I said, it's still very preliminary. Again, there are, you're not going to look at all the categories. We have selected essentially 6 out of the 15 categories that we will be focusing on. Then the next step is to look at our suppliers, who are our big suppliers, who are those, for us in the telco, we're a bit fortunate. We do work with a lot of the bigger suppliers like your Ericssons, your Nokias, even Huawei. They are very, very ahead of the pack, so we do learn from them as well. But then there's also the smaller suppliers that we need to work with. So principally, a lot of our decarbonization journey is going to focus on essentially these 6 categories and really collaboratively working together, learning from our bigger, better suppliers, and also working with our smaller suppliers as we go along.
Okay.
So yeah, that's a bit high level.
Jitendra, very, very quick response.
Very, very brief. Okay, so there are 2 elements to it. I mean, there are more, but I will focus on 2. One is, of course, suppliers, and the other is customers. I think on the supplier side, you need to, of course, start to play a more consulting role towards the supplier value chain, essentially to bring them on the bandwagon with you, so that they are also, of course, equally committed to reducing their scope 1, scope 2, which essentially then for us becomes scope 3. On the customer side, I gave an example, of course, how do you do the business model innovation, but I think the core and the fundamental remains is that can we continuously bring products and solutions for our customers which are certainly being more energy efficient every few years. So you need to continue innovating so that you certainly bring in more benefits, for your customers. And if you're able to do that, essentially customers will switch over to more efficient and innovative solutions, and in the process, they will be able to save on the energy consumption.
Thank you very much, and sorry to rush. We are at time. Nikki, I just wanted to squeeze in one final comment. You've been hearing from different sectors about their own journeys. Does this encourage you about your role and the work that you're doing around building the market infrastructure?
Yeah, well, we're not going to build the market infrastructure. we're going to, I guess, create the conversation around around what could help build the market infrastructure in a way that's very positive. It is encouraging. It's really interesting to see sort of where the rubber hits the road. What does this really mean? Because we can talk about it from a broader market perspective and say what creates a good market, liquidity and price certainty and transparency and all these good things that create a good market. But at the end of the day, it's the companies and businesses, and no matter how big or small they are, mind you, because there's a lot of very, very small operations in this region that need to be targeted, particularly around the agricultural or nature-based end of the carbon markets, that really what will work. How do we make sure that the framing of those policy recommendations or those suggestions to those who have an influence in that market infrastructure, the exchanges and so on, helps to create that liquidity and that flow, because it is an enormous opportunity.
Absolutely.
So it's encouraging, but thank you very much.
Thank you very much. I'm going to have to wrap up. A couple of sort of reflections from me. Have the confidence to be an early mover, to take that risk, be ambitious, be bold. Experience that you develop by doing that is very valuable when you're talking to your clients and elsewhere. Proven tech is very important. The regulatory framework is developing, it is emerging and growing and getting more robust, but don't wait, take action now and move on. So thank you very much to my panel here, including Adele Anthony from Axiata, Jitendra Khurana for Signify, Nikki Kemp from Singapore Management University, and Victor Chen from Delta Electronics. Thank you again to Signify and Singapore Management University for sponsoring this particular session.